All right, traders, today was absolutely insane with all of the earnings runners, along with the crazy price action on the overall stock market. Within this video, we're going to be doing an in-depth price action analysis on several stocks. We're also going to be covering the stock market and going over the in-depth price action analysis on where the price action is heading for the market in these stocks for the short term, for the micro, and then for the more mid-term, longer term for the macro. So let's get right into the in-depth price action analysis. If you enjoy these videos, make sure you smash that like button. Let's get right into the price action analysis. So in terms of the SPY finally had its first red day, its first gap down ever since it had this massive 4-day run. You guys remember I told you about this key level, this key 456 level. This is where I believe the macro would kick in and the bears would step in, which they did as the SPY fell all the way down to $445. I did not decide to add to my puts here simply because there was no bearish confirmation. And in terms of today, we did see a bearish confirmation on the daily, but I chose not to add to my puts again simply because SPY has been very, very choppy for the short term being, and it's been very, very sideways overall price action, and I'm finding it very, very hard to trust it for the micro price action. So I'm going to be using a more time giving, more time essential, more of a confirmation rather than just a 1-day candle. I'm going to give it a couple days, right? Within the chat room, I had pointed this out as well. Updating members at around, let's see. So I mean, this was the main thoughts that I had in terms of the SPY at 3:09 p.m. I simply said I will not be adding to puts just yet. I think for the micro, we can see a spike back, going to be patient one more day and wait. Either way, bears are still in control for the macro. So the main reason why I decided to wait in this current position is, as I was talking about in yesterday's video, 453 needs to turn into resistance. If that happened, then SPY is going to drop into the 440s, which that did end up happening in the morning. However, it did come back very, very strong heading into after hours. And I think that has a lot to do with the earnings plays. We had several earning runners, including, Amazon and a lot of other ones like Snapchat and stuff like that. The earnings were just out of the park in terms of the price action. It was unreal. Amazon spiked over 14%. I believe Snapchat went up 62%. It's just unheard of in terms of earnings, runners like that. So with that being said, I think that was a huge influence for the micro push. And with that being said, I also think SPY still has a good chance with the momentum and with all these earnings runners to still shoot back up and fill this gap at 457. And it can potentially go a little bit higher and fill this gap at 464. So in terms of what will I be doing and what will I be looking for and waiting for, the main thing I'll be waiting for on the SPY is simply for this gap to fill. There's going to be a gap to fill at 457. If you see it react as a resistance at 457, if we could also get something like this on the daily, see how the SPY gaps down, then it trends back up, tops out towards that previous resistance, forms the bearish candlesticks, then it gets crushed, cracks this key support. What we can potentially see, so we got the nice pullback, we're looking for a spike back up to 457, looking for some resistance to form in between 457 to 465 on the daily. Once we get some bearish price channel forming where it's not really breaking out and it's just kind of sitting in between those levels, that will be the time to add and to take on a position for these macro put opportunities. So that's kind of what I'm waiting for in terms of this buy from a put opportunity from a macro point view. Simply just waiting for it to go to 457, for it to form some bearish candlesticks on the daily, for it to form a price channel where it's just kind of sitting and kind of developing. In current market conditions, I don't think it's very safe to just simply trust a 1-day price candle, because the market's just doing whatever it wants to do. It seems to be blowing through patterns recently. So that's kind of my thoughts, to wait for more of a validation, more consolidation, more proven resistance, a couple more days in between 457 to 465. Those would be the best key levels. But yeah, I definitely see, SPY will most likely go up for the short term. In terms of where we're at right now, it had a nice pullback. It came back strong in the after hours. If it reacts at, $453, that key resistance tomorrow, if it reacts as a resistance, it goes back to fill the gap below. There's a gap to fill below at 446. If 453 reacts as a resistance, it goes back down to fill this gap at 446. There's now a gap to fill at 446. If 453 breaks out and turns into support, it shoots up and fills this gap at 457.35. That will be one of the key resistance levels we're going to be looking for on the SPY. So that's my thoughts. That's my analysis on that one. Let's go over a couple more here. So in terms terms of Snapchat, Snapchat had a massive move up. I believe this went up like 60% during extended hours with the whole earnings situation. It hit $40 a share, had a small little pullback. With that being said, this is what I want you to focus on in terms of Snapchat moving forward. There's a gap to fill at 42.73. Let's see how it reacts when it fills this gap. You know, it's a huge downside potential level. Let's see if we can get some sort of gap close reversal at this key level. Another thing I want you to do is when Snapchat has a massive gap up on earnings, study how it tends to react. Use history as a guidance on where the overall future is heading. So just kind of go back, see how, you know, Snapchat has reacted in the past when it has a massive gap down. You could see nice micro pullbacks, right? And then it retests resistance, nice micro pullbacks. That's another thing to keep in mind. But yeah, for Snapchat, I'll be waiting for the gap to fill at 42 around there. If we see it react as resistance at 42.73, I'm going to be looking to grab some put options for a short-term micro crash to around 37 to 36. So that's my thoughts on that. Not really interested in buying or chasing at this point. In terms of Netflix had a nice red day today. You could have used the gap close reversal strategy on Netflix stock. When SPY was topping out at 453, Netflix formed a perfect triple top at the previous closing price. You know, it had a gap down. And as you could see, it filled that gap that was waiting to fill above, and it showed signs of weakness 3 times in a row. You can see the gap fill right here, resistance, resistance, bearish confirmation with the bearish wick. Then it got crushed, and then it started to fill that gap below. There was a gap to fill below right here at 384. We covered this in the previous video going over this play for puts. Netflix looks like it's going to fill this gap at 384. It looks like it's heading lower. We could see how it reacts. If 384 cracks, it's going to fill this gap at 361. If 384 holds, it's going to spike back into the low 400 range. Macy stock. Macy's is looking very, very bearish. It looks like next week we're going to be on track to fill this gap. There's a gap to fill at 22.94. That's where I see Macy's going. Very bearish wick on the chart right here. Check out this pattern, see how this looks identical, this move right here. Look at the candlestick, see how this looks identical right here. Compare the candlestick to this. It looks like Macy's is going to be on track for some big red days, and tomorrow can be a big red day for this stock. So keep an eye on Macy put options for the gap to fill below at 22.94. Keep some focus on this stock, right? The option chain and the volume isn't that liquid, so size in light and look for, a thin spread, but keep an eye on this. This should be a good one for a put opportunity. I'm really liking this setup. In terms of Apple stock is topping out at some key resistance. For the bears to step in, 172.30 has to crack. If that can crack, they're really going to try to pull this back down. If it holds, they're going to run it back up to like 174.50, around there to 174. Not really interested in this setup at the moment. Robinhood is towards some key resistance. Not really doing much. It's struggling to break above this 1450s for 4 days in a row. It's either make it or break it for this stock. It can't hold up on this thin air with this new all-time low at 950s. So in terms of Robinhood, guys, keep a close eye on this for a potential put opportunity. It's been 4 days where it failed to break out. So what I want you to do is, if you see this here, let's see if it's moving during extended hours. So it's going up during extended hours. So if you see strong resistance come in towards 15, look to play a put with a tight stop. Use a very, very tight stop, because if this goes above 15, this is going to, really spike to 1650 plus. But just keep an eye on this one. It has been holding up fair enough, fairly nicely. It looks like it's trying to break out. But if you see it struggling towards the 15s, look to grab a put with a tight stop. It's either make it or break it for this stock. Coca-Cola. So in terms of the daily chart on Coca-Cola, we did see a new all-time high in terms of this stock. What we really need to see happen from here is we need to see a breakdown below 61.39. That's what we're going to need for this stock. 61.39 does have to break down. In terms of the overall squeeze indicator, it is setting up. You could see the teal blue is starting to come in. It is setting up for another squeeze, unfortunately, which is going to hurt those macro puts for the time being. But as of now, Coca-Cola is turning very, very bullish for the bears to step back in. They need to crack 61.39. If that can't happen and that holds up, then we're on track to go to about $63 within the next 2 weeks. So that's the thoughts, that's the analysis on that one. Like I said, the current squeeze indicator is triggering, so this stock is on track to continue to go higher and to push for new all-time highs. In terms of Shopify Shopify had a very nice breakdown today. You can see a lot of stocks really sold off. They're getting diluted. In terms of Shopify, your key support is at 780. You could see how it reacts if you see strong support come in towards there. Then it's going to shoot back up to fill this gap at 885. Not really interested in this one at the moment. CVS, not interested at the moment. NEO is very, very bearish. NEO looks like it's going to go back down to fill this gap at $20.90. So keep that on your radar for a potential put. If you see this break down this key $23 level, once $23 cracks on NEO stock, it's going to fill this gap at $20.90 fairly quickly within 1 to 2 days. Keep an eye for that key breakdown put opportunity. Very bearish on that one. In terms of Spotify, wow, Spotify had a massive red day today, with the whole earnings situation. Not really interested in this one. Just not interested in this one at all at the moment. Same with PayPal, not interested at the moment. This one, so in terms of Google is looking fairly bearish. It looks like it's going to continue to fill this gap at 2,753 within 1 to 2 weeks. Pretty bearish on that. Not really interested in trading it. Amazon had a massive move up with the earnings. I believe it was up 14%. This went from $2,728 all the way to $3,300. Now it's at $3,172. So in terms of Amazon stock, the key breakdown level where it's just holding up on thin air, where it's going to have a massive sell-off, if it cracks and turns 3,100 into resistance, you're going to see a major pullback to $3,000. If it holds that level, it's going to rip back up to $3,215. If that breaks out, it goes to $3,260. Those are the key levels for Amazon. The key breakdown is going to be 3,100. That's when it sells off very, very hard. But yeah, if you're in on this, I wouldn't risk more than like 3,150 to 3,130. That's like the most I would risk on that. But yeah, congratulations for those of you who played calls on this. That was a phenomenal play along with Snapchat. In terms of Facebook had the massive gap down. Huge shout out to one of the members within Trader Society, Han Solo. He held one put overnight on Facebook. It cost him like $154, something like that. He sold it for like $4,100. The return on that was absolutely insane. He went far the money. He did a YOLO trade. It worked out fairly well, and he's been crushing it. So big shout out to him. In terms of Facebook, I'm just really not interested in it for the moment. I'm just going to avoid this one for now. There is a gap to fill right here at $234. So we'll see how it reacts once it fills the gap. Other than that, I'm not too interested in it. There is a gap breakout also at 248, but as of now, I'm really not too interested in Facebook at the moment. In terms of AMD stock is about to fill the gap. There's a gap to fill at 122.78. If that breaks down, it's going to start to fill this gap at 105. If that turns into support, it's going to pop back up. Overall, it looks very, very bearish. It looks like we're going to see a crack of this. If 117 cracks, you're going to really want to, you're going to see a pullback towards 107 within a couple days from that happening. QCOM looks extremely bearish. Key resistance right here, bearish pin. This stock gets crushed once $177 cracks. The stock's going to get crushed. It's going to drop like 10 points. So that's a key breakdown to keep on your radar. QCOM puts on that. So there's going to be a lot of key breakdown put opportunities lined up. In terms of Ford had earnings. You could see it did break down nicely going to 1830, then it popped back up to 19s. This one just needs to really stay under 1960 for it to continue to drop. If it stands under 1960, this will be back into the 1830s in no time. Nvidia, a lot of you guys have requested Nvidia stock. So we do have earnings coming up as well. But in terms of Nvidia right now, this is looking fairly bearish. The candlestick on the daily looks extremely bearish. We could see that case scenario where it pops back up to 270. 270 would be your best price to grab the puts. If SPY goes to 265, this will probably go to 270. So keep that in mind. That'd be the best key resistance level to look to grab puts once you see the bearish confirmation. But in terms of Nvidia, it does look like we are going to see, a gap fill. It looks like we're on track to fill this gap at 228.40. The best price to grab puts, if it rips back to 252, that's an ideal price. You see it react as a resistance, get some puts, ride it back down to fill the gap below. If that breaks out, then wait for the puts towards this key level at 270. That's my thoughts on this one. Overall, kind of bearish. In terms of Snapchat, so we pretty much Went over this one for the most part. Yeah, we went over Snapchat. And then ATVI. ATVI had terrible earnings. This dropped to 78, and then it popped back up to 79. For this one, if 79.25 can react as a resistance, it should go back to at least 78. So I'm going to keep an eye on that for tomorrow. But fairly disappointing price action, with this whole choppiness in the chart. So it's just not that ideal right now. But yeah, guys, I mean, that's my thoughts. That's my analysis in terms of more stocks. Lucid. So let's take a quick look at Lucid here. Yeah, Lucid is still overall bearish. And then let's see, BBBY. This one is fairly important. It's really going to be reliant on SPY. We were potentially seeing something on BBBY where if 1660s turns into support and breaks out, it's going to be on track to have a squeeze and really shoot back up and start to fill this gap at 22. However, you can see it's dark blue on the squeeze now, which is very, very bearish when that happens at resistance, right? And we have this red candle coming in. So BBBY is setting up now for a potential put opportunity with this whole red day situation. So if you see this rip back up to 1704 and it's reacting as a resistance level, you're going to want to look to grab the put options on a BBBY and ride this back down into the lower 15s. That's the thoughts. That's the analysis on that one. It's either make it or break it for this stock. In order for the bulls to remain in control for the macro here, they need to quickly turn $16.40 into a support level. If they can't do that, this is going to be on track to get crushed, especially once 1530 gets taken out. If 1530 cracks, it's going to have a big pullback to like $14 to $13.70. In terms of Tesla stock is looking fairly bearish. It looks like we're going to get a gap fill play on Tesla at 846. It looks like that's where it's heading to fill the gap at 846. We'll see how it reacts at 846. If it holds up, it could be a quick scalp, a nice pump back to 870, 880. So we'll see. We look for a little pump at around that level. Right now it's bearish and it's on track to fill that gap below at 846, right around there. So we'll see. But yeah, guys, that's my thoughts. That's my analysis. If you guys enjoyed this, make sure you make sure you subscribe to the channel to stay up to date with future opportunities, future stocks, future analysis. And for those of you within Trader Society, I will see you guys live tomorrow at Market Open. I'm looking forward to the live trading session. If you do want to be a part of Trader Society, it's going to be that first link down below in the description. So I will see you guys till then within the live trading session.